Unity Technologies reported third quarter fiscal year 2024 financial results that has many investors interested about this gaming developer stock. But it's not just for gaming developers. The company has industrial use cases as well. I'm going to share one specific case with you in this video too. I'm going to review the company's latest quarterly financial results, and then I'm going to update my recommendation for Unity stock and let you know if I think it's a buy, hold, or a sell following these financial results, comparing them with its valuation to determine if it's a good value for long-term investors. So let's get into the results first. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Unity reporting revenue from their strategic portfolio came in at $429 million in the latest quarter. That was down 2% year over year, but it was above the management's guidance range, which said that it would achieve $420 million at the high point. So they beat their expectations by $9 million on the higher end. The net loss for the quarter came in at $125 million, compared to a net loss of $125 million in the same quarter last year. So flat in terms of year-over-year net loss, but that's an improvement because this year they had lower revenue, and even though they had less revenue, the net loss remained the same. So that demonstrates some improvements on the bottom line for Unity Technologies. Overall revenue for the total company in the third quarter came in at $447 million. That was down 18% year over year. And that's driven by the company's strategic choice to get out of certain segments, to get out of certain businesses, and that's bringing down their revenue. It's a strategic choice. You might ask, why would a business choose to do this? Well, it's always beneficial for a business to evaluate its customer cohorts and make proactive decisions about which customers it will serve. Businesses are in a better position to serve a certain segment of customers than they are to serve other customers. To simplify this case, I make an example of a restaurant that's down the street from your house. You are a very prime target for that restaurant. It can serve you very effectively because you live so close. Now, somebody that lives 50 miles away might be a potential customer, but the company, that restaurant, can't serve that customer well. And so it would be strategic to focus on the customers that you can serve better. And in that way, you can increase the performance, you can increase the value you deliver, and at the same time, you could reduce your cost of goods and your marketing spending. So sometimes businesses make this choice, and Unity Technologies made the choice to exit some businesses. Now, it would have been better if it would have realized this before it had that business and spent all that money to attract that business in the first place and then decide to get out. Still, the management is making this choice, and so far it's resulting in huge decreases in revenue for the business. So in September, after months of listening to customers, partners, and their community, they announced the cancellation of the runtime fee and a reversion to the existing seat-based subscription model for all gaming customers. Remember, there was a huge backlash when they announced that runtime fee that developers were not happy about. That caused a lot of backlash, and a lot of customers left the company. And going back even further, they had another fumble in execution on the advertising side of the business a little over a year ago. And so now that fumble on top of that, execution has not been great at Unity Technologies. They've not executed well on the business plan. That's something I hold against the management team when I'm deciding how to rate business, whether it's a buy, hold, or a sell. I do give them minus points in terms of executing on their business plan. They say that since announcing these decisions, they've seen a positive trend in renewals and an increase in early adoption of Unity 6, which is their latest generation model. So they believe that over time, these pricing changes will help them deliver consistent revenue growth in the double-digit range for their core subscription business. And in October, they launched the Unity 6, the most stable and best performing version. It's designed to enable creation of better games, built more quickly and more efficiently than ever before. With new graphics capabilities that move workloads from CPU to GPU, They've seen CPU computation time improvements from 4x, dropping from 40 milliseconds to 10 milliseconds per computation in their tests. And that's been the big trend in data centers. If you've been following my videos that I make about AI stocks, you'll have noticed that there's been a huge transition in data centers where they were previously based primarily on CPUs, and now they're based on GPUs, given the increased performance in accelerated computing. And it looks like Unity Technologies is benefiting from that increasing computing effectiveness. So I highlighted in the beginning of the video that I would present one other use case outside of gaming, and a company, KLM, used Unity to build a virtual reality cockpit training application that allows pilots to practice, hone their skills, and enhance situational awareness. So that's one use case where the company's systems can help an industry develop training models where it lowers the cost of training before you get these pilots into an actual plane. So it builds practice, they gain some experience before they get into actual planes, and thereby lowering the cost to train because you don't have to train exclusively inside real planes. Looking ahead, the company's raising the guidance for the full year due to better than expected results in the third quarter. They now expect revenue in their strategic portfolio of around $1.7 billion. That's up from around $1.685 billion previously expected. So roughly $20 million more in revenue expected now for this fiscal year. And that's also going to lead to better profitability, with adjusted EBITDA at the midpoint of $365 million, up from a previously expected $345 million. So you could see the economies in scale in the business model here just by their change in forecast. They're increasing the revenue forecast by 20 million. They're also increasing the profitability forecast by 20 million. So that increase in revenue is flowing all to the bottom line. They're increasing profitability more than expected for the year. Cash flow from operations has improved at Unity Technologies. You can see the cash flow from operations, $122.3 million, up from $120 million in the same quarter last year. In the first 9 months of 2024, cash flow from operations has improved to $203 million, up from $163 million. So even though profitability, revenue, and customer growth has stagnated, the company has improved the cash flow from operations. And now you can understand why they made those strategic choices, right? Focusing on more profitable customers has led to improving cash flow from operations at Unity Technologies. So now Unity Technologies, or Unity Software, stock price is trading at a forward price to earnings of 24, which would be a reasonable valuation if they weren't going through all of these headwinds they'd gone through in recent quarters and recent years. If the execution of the business was strong, I would have rated this stock a buy. But at these valuations, with the execution of the business in question, I'm not rating this stock a buy. So to update my recommendation, do I think the stock is a buy, hold, or a sell? I think the stock is a hold at current prices. If the company's valuation was to improve, I would consider increasing the rating on the stock. Or if the management team demonstrates strong execution over the next 4 to 8 quarters, I would consider updating this to a buy as well. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.